All right. All right, what's up, guys? So, holy crap, yesterday, huh? So, hold on a second. All right, so we ended up with was a pretty good down day yesterday. Volume was higher than yesterday. I've got the Nasdaq charts on the right. The top is the 15 minute. I guess the 1 minute should be the 15 minute. Let me change that. And the bottom is the daily. Now again, these are the futures, so they're going to be slightly different from the Qs. So there's the Qs. What up, Noel? So there's the Qs yesterday. Let's take that NQ back to the daily. No, I don't want to delete the style. Thank you for the prompt. So there's going to be a unique difference between these two. Remember yesterday we talked about that low right there, them selling off. Yeah, that's exactly what they did. Pretty bad. What's up, Blay? So we're looking at the difference between the NQ and the triple Qs real quick. So here's the triple Qs. Pretty high volume day, not high as these earlier high volume down days, but that's pretty damn high volume right there. Close almost right at those lows, 165. The futures, however, the second that the market closed, bounced basically 1%, a little over 1%. So depending what you're taking your Qs off of, I mean, either way, it's still not a good thing. We never breached this trend line. We talked about a break of this trend line would get us up to the 50-day probably and see what happens up there. We failed that. Looking a lot like an H pattern, which implies lower action. And looks like that's what's in the cards right now. So at this stage of the game, we don't have an immediate reversal in these. In the past, let's look at this. We've had some immediate reversals. So with this one, we had a low. We had a 1 day lower low. We had that day, which volume was decent. And then we basically reversed immediately all the way through after a bad morning. Reversed immediately, came back up to highs. Kind of V-bottomed again. Now we have a lower low, which we didn't really get. We had a little bit of a lower low here, but this is a much larger structure. Looking at potential H patterns in the market, we did identify one. Now, at this stage of the game, the market does feel different than it did earlier in the year. I would almost say, if you know, we talked about those high volume days, things of that nature. Now we're in the stage where we've surpassed the high volume day. So unless we get another super high volume day, you may just want to wait for the follow through day. Remember, we talked about the follow through day was the IBD signal for a bottom. The high volume down day was a theory I've had regarding, because high volume down day is like, here's one right here, right? This is the last one that I think we could be, without us going into a deeper actual correction, which is a 15% drop, which I'll redraw those lines. This is the other one that had a type of an H pattern, elevated volume again, and then this one. So this close looks not exactly like it because we didn't undercut this low on this particular bar, but then we flattened right out and then just slowly kind of went back up, and there would be your follow through day right there. So at this stage of the game, unless we get another one of those high volume days, or we see some supportive action. One thing to note here too is all these candles close pretty much right around the same level. These three are almost exact. That close was 39.61.5, 39.63, 39.62.75, and then you had the outlier here at 39.42. So about a $4 close difference. This is all supportive action. They're basically buying it up until the 39.65 level, whatever level they arbitrarily deem is necessary. When I say they, I mean whoever's buying down here. I don't know who. No one ever does. But this is an H pattern that pretty much stopped immediately afterward. That was one we took a quick look at the market. Here's a small H pattern, but not nearly enough time has passed. So going back here, let's draw those 15 and 20% lines out again. So there's 15%. And there's 20%, okay? So those are our, and then we have our 12% line. Oh, we pretty much did 12%. What up, Paul? So there's the 12% that we did over here earlier in the year. We've met that target. Well, it's not really a target. 12.6%. We've met that level of selling. Yeah, both right about 12.6%. All right, come on. So I'll draw us to 12.6%. Now, something that always doesn't always happen, but where are you at? Okay. Now I'm starting to think it's my computer that's messing up. That's the same freaking line basically, huh? Almost. So I'll get rid of that. So we are within range of us finding a bottom. So yeah, we're down there. It sucks to feel back here. Paul says, hereby claim credit for being first to call bear market. Well, this would be a bear market, Paul, down here underneath 6,200. This would be the definition of a bear market in stocks. This isn't even a full-blown correction yet. A correction would be down here at 65.72 on the NASDAQ. So we're not even in a full-blown correction yet. Now, the market does look a little bit weaker, like I said earlier, than it did during these two pullbacks. A lot of the top stocks were holding up very well here. Over here, there's a bit of a difference. Let's take a look at some of that. And then, as you guys know, we had Tesla with really good earnings yesterday, opening at 318 after closing at 289. So that's pretty cool. If you guys read Tesla earnings report, I suggest you do. It's a good read. And I say that the earnings report essentially says, I'm going to take over the world. And so I'm going to post this earnings report here. Eli was nice enough to find that for me. I'll forward that on to you. Thank you, Eli, if you're interested in that. But, yeah, Tesla, after all the whipsaw down here from that CEO stuff, great earnings. And we're back up here at, what was it, 320 or something? But Tesla looking really good in a pretty hawkish tape. Okay, so let's take a look at some of those leaders, and we'll Netflix being one of them. So these are the prior two corrections in Netflix this year. Look at those two because these were kind of those V bottoms that happened. This time it's a little bit different. We actually, I don't know when I drew this Head and Shoulders neckline, but this is the Head and Shoulders neckline for Netflix, and it takes us down here to 208. And yesterday it looks like we just started getting that. We had a break. Here's a test of the 50-day that failed. And so this is one reason why this could be different. Not really a Head and Shoulders here. And even if you did want to call it a Head and Shoulders, it never broke that neckline. Here we have a neckline break. Definitely could hit that target of what looks like about 210 in the future. So that's a big negative, a big topping pattern on Netflix. And it's a Head and Shoulders. Some people will say this is not valid because the shoulders aren't exactly, aren't like horizontal from each other. Maybe, but it's sure as heck behaving like a Head and Shoulders, at least at this stage of the game. Facebook was another one. So Facebook earlier in the year had here's the two shakeouts right there. Unless it was this. I'll have to go. what's the dates on those? So the bottom here is 2.9, and let's just call it 4.3. Now, like I said, at this stage of the game, I think you're looking for a follow-through day. So I don't know if I try to micromanage, calling a bottom. Like we said, the high volume down day strategy, has worked in the past. No guarantee to work in the future, but we're still underneath those high volume. I don't have a pen. I'll just note it in here. 2.9 and 4.3. There we go. Let's do it on the computer. Okay, so 2.9 and 4.3. We're looking at Facebook. So there's 2.7 and there's 3.20 whatever. So on Facebook here, we did have a pretty well-defined lower low. You could almost argue that correction was based off of Facebook, a higher high and a lower low at this stage of the game. So big gap down here could cause damage to Facebook for quite some time. This is a pretty broken chart. It wasn't really broken over here, and it did have a good breakout right there that took us up another 17%. So after a full retracement from these lows, it rallied into all-time highs fairly significantly and then failed. So now we have a gap down and a failure. So Facebook, Netflix, Amazon is next. Take a look at Amazon, the differences here. So here's the two in Amazon. We have higher lows, 2.8 and 4.3 right there. This looks a lot like the NASDAQ. Looking at it, so we go high. It did go a little bit higher, a higher low as well. Had a significant rally after a cup with handle breakout, up about 27%. Now what do we have? Now we have actually going all the way down to the 200-day moving average, which Amazon hasn't touched since my chart began. Historically, this would be a pretty good time to buy Amazon. You can see down here we undercut the 200. Things were looking really bad, and we actually reversed and continued. So under the 200-day here, pretty significantly. We're not under the 200-day yet. We basically have just touched the 200-day. So definitely could still be some more downside to go, and Amazon here can kind of lead the way. About 11% below the 200-day there. 15% below the 200-day there. And keep in mind, Amazon is not a stock that is going to turn on you, right? 15% under the 200-day there. Here's a pretty egregious 54%. This was 2008. We're not doing 2008. So it looks like about 11 to 15% under the 200-day is the max that they've let Amazon get since 2008. Now, we haven't had a bear market. We've only had a number of corrections. What's up, Gomri? So even so if we get down 15% here, or there's 11% and there's 15%. So right back in line with our bull market or correction bear market trajectories here on Amazon. So we could get down to those levels. So let's look at another one: Amazon, Netflix, Facebook. What's in? I never really followed the FANG stocks. Google would be one. Now Google hasn't had as much support as a lot of the other tech names have. Under the 200-day a number of times there. Living it under there under a nice tight base. That was a pretty tight base right there. You got to give it that. That was nice. I don't really do a lot of investing in Google, to be honest with you. But it's only been, so here it was living under the 200-day for a while. This was 2007, 2008, and then in the April of 2009, finally crossed the 200-day again. So you can just tell it's under the 200 by the most it's been under for a long time. And we got a market open right there. Twitter up 14%, Tesla up 10%. Wow. Very nice. FFIV, ANIC, Ultimate and Freightliner. Let's go take a peek at what's working. Market gapped up here about 1.5% after that massive day yesterday. Need to see how the market reacts here. All right, let's watch the open. All right, we'll do the 5-minute chart. So like I said yesterday, right after the market closed, this thing just not gapped, but this thing just ran higher. Ate a whole bunch of money right there, and then continued right here. So, could be one of those gap and go situations. But another high volume candle. We talk about the high volume candles kind of these are institutional sponsorship days, especially this day right there. We talked about undercutting it. So if you've got your positions, if you still have your positions, like I said, not quite sure if I'd sell them, but even if we do go lower, what's up, Kevin? So at this stage of the game, we're looking for a follow-through day. We've had some of the high volume candles. Right now, we're looking for a follow-through day. Probably won't get it today. But now we're counting out another 4 days for that follow-through day. Oops. All right, so we'll keep these up over here, and we'll try to go through. I can't do a third chart. So here's the thing, Blair. Every day could be a buying opportunity. The problem here, and what I was trying to go through a little bit earlier, is that the leading stocks are acting much differently than they've acted in the prior corrections. And they weren't even true corrections. They were just little pullbacks, almost reaching corrective status. We don't know how this one's going to go. We've already had those high volume down days, which usually, as we saw a few weeks ago, is indicative of bottoming behavior. We have seen it whipsaw underneath this level right there. Oops. Okay. Wasn't trying to do a text note. We did see things kind of living lower in this area. The problem here is that you never know how low a correction is going to go. You never know when the selling is going to stop. It's very hard to catch the bottom, and to be honest with you, that really isn't the game. The point of that TQQQ strategy I showed you guys isn't to get the bottom. It's to find a relatively low area to buy, and then you just let the market do its thing after that. That's a much longer term strategy. That'd be like a Kevin strategy, right? Like you're looking for those longer term entries at what would be not a risky level, and the high volume doesn't necessarily take the risk out of that particular strategy. But what it does is it gives you an indication where institutions are stepping up. Okay, and this is where institutions stepped up on that high volume candle. Now, yesterday was a bad day, don't get me wrong. There was a lot of selling yesterday, but what you saw a week and a half ago on this candle here is a lot of accumulation. Now, that's behavior. This is price. Okay, and those are two completely separate things. All right, so there's behavior. This is noticing buying. And then this is, just a major sell-off yesterday. Yesterday was a day where they started selling and just never stopped. You go to the 15-minute, you can pretty much see that on the chart. I mean, they had like one pause here when some dude went to go get a latte, and then it just proceeded to sell off pretty much the rest of the day. You do get these days from time to time. And if you look at, Let's go back here. So, and one thing I didn't get a chance to do yesterday, too distracted with the home stuff. I did want to look for just massive sell days after a bottoming candle, and if that indicated a lot of weakness, or if that indicated that was just another potential entry point, like we talked about the high volume bottom candle right there. So there's your high volume. So we had 3 high volume candles in a row. So one of these, consider these high volume. We did undercut yesterday, never undercut here. Okay, so that's at the very top, though. That's not really indicative of what we're doing here. So, yeah, Twitter up 16%. We talked about that the other day. Earnings were coming up, and Twitter actually looked like it was holding that bottom really, really well. And so that moves. I don't know. I'm going to wait for a base before even attempting to buy that one. And we're back to 2008. Never a good time to try to compare yourself to. So head and shoulders of the NASDAQ futures. Had a high volume down day here, which actually was an initial sell-off. That's the first day. That's an initial sell-off. There's a high volume down day. Here's a day where we undercut. Only down about 2%. Yeah, not sure if I'm seeing what I want to see here. Could Facebook be a good play judging off of Twitter? It's possible. It's possible. I think the difference though is Twitter was beaten down. Well, I guess Facebook was beaten down too. Let's go take a look. No, still held that position. No, I still held that position. It was scary. It was scary, don't get me wrong, but the whole strategy doesn't work if you don't work the strategy. So, yep, still in it. So, just gonna kind of go for the ride, I guess. Gonna play it out. Like I said, this isn't something I've been doing for years. That's a newer strategy for me, but it is a strategy, and back testing it works. So I'm just kind of going with the ride right now. Now, yesterday was a pretty bad day, and it's probably going to go down further. How far? I have no idea. Oh, one thing I did want to look at. Sorry, I know I'm jumping around themes here, guys, but I guess I go to the weekly for this. It had to do with volume. Yes, that's pretty damn elevated volume on the NQ. Now again, I don't get any volume on the NASDAQ Inc. Yeah, see, I get no volume on the NASDAQ. I need frickin' volume on the NASDAQ on a long-term chart. I'll have to figure that out somewhere else. So those are some pretty 3 red weeks right there so far. Now here, Yeah, there's no trend line there. All right, never mind. I'm not getting what I want. Not getting what I want. Huh. Not getting what I want at all. All right, let's look at some of these stocks. So there's Twitter's little gap up. Actually, come to the 200-day, which looks like it's gapped up above the 50-day. There's the 200-day. So right now that's kind of acting as support. That 50-day. It bounced right on top of it. Yeah, that's right. Give me what I want. Exactly, Eli. Thanks for having my back. Yeah, I don't know what I want. There was a chart I was looking at that had a very high volume area, and I was trying to see relatively how we were doing in accordance to that area, but I couldn't see it. You guys don't need to see me staring at a blank chart. Got some MJ names up. MMNFF, 8%. Protolabs up 8%. A leader in the 3D space. We talked about this yesterday. Earnings looks like they beat pretty decently. About 15-20% or so. Keep a lookout for that. Tesla up another 7%. After Citron's report down at 260, now we had good earnings and they're selling it off from 320. Pretty much almost the full range of that channel in 3 days, which is pretty spectacular. Take-Two Interactive. The problem is a lot of these kind of look like dead cat bounces. A lot of them. So New actually putting in an interesting little flag pattern right here. An IPO that just fell flat on its face. I'm not saying to go out and buy this, but I think it's interesting to note how New is behaving down here. This is a China IPO. PKG, after a route to the downside there, finding some support. Already a decline in selling right there. Noah, HCC. Why am I not getting all my... Okay, look at how strong this thing is. I don't know what the hell's going on with Warrior Coal. But look at that thing. It's above the 50-day for crying out loud. The market's been taken out to the woodshed, and HCC's like, okay, guys, cool. You guys go do your thing. I'll do mine. So could keep an eye on whatever this is. As a matter of fact, I'm going to go do some more research. Let's go do that. During these challenging market times, the best thing you can do is do some homework. Don't try to overthink it. Don't try to overtrade. You're just going to get yourself in trouble. But do some research. All right. Composite rating 82, relative strength 94, which is good. Ranked number 3. Produces exports metallurgical coal in Alabama. Capacity of 7.3 million metric tons of coal. So what? I guess coal's doing good now. And see, that's the thing that's weird about this. Is it's a coal company. What are we missing? Guys, that's our mission. What are we missing in coal? Energy, heating, ethanol. Do they have coal futures even? Or is it too dirty to even have futures? Oh, Coal Slam. The rare mineral slam. Coal prices. Finviz does not have it. All right, up to 1%. We're down 0.7%. So far, that low being respected. Let's do 15. No after hours. And that's not... I don't want after hours. I'm really looking at what volume is like relative. So look at that volume right there on the Qs is pretty normalized. 6 million there. Yeah, I'm never going to get a beat on that. Anyway, let's take a look at coal. Man, coal prices are rising. Look at that. Look at that shelf in coal prices right there. Let's go back 5 years. Oh, wow, look at that. Coal prices are rising, y'all. That's why HCC's looking good. Interesting. Who'da thunk it? Who'da thunk that? But HCC, man, looking great. All right, let's go look at the leader in the industry. And see, here's the thing about coal. I heard this the other day, is that you really can't open up any more coal mines, and we're exporting quite a bit of coal. And so that could be what's kind of driving us here. I don't know if I don't have a good Alabama accent. I'll probably offend someone from Mississippi. HCC, I mean, this by far looks like the best chart to me. CEIX is also coal. And that's not horrible. It does say Alabama. NRP. HCC looks really good, though. EPS ratings. Here's a couple more. CNX. They're not looking great. METC. That doesn't look great. Definitely down at lows. SXC. Why do I have two of the exact same charts? That is pointless. You guys are supposed to save me from that. All right, let's go to long-term up here. Daily down here. Look at HCC again. That's it. Oh, it doesn't have any downtrend to be had. That's why it's holding up strong. There's no history. CNX, METC. I'm just assuming they have to close mine after mine after mine. CCR. Oh, look at that one. That's interesting. CCR. That's pretty beautiful. Now, again, not sure if these things are going to like take off as a traditional growth stock would, but industry rank number 52 out of 197. That's pretty good. Just tons of red, though. ROE's 80%. Pre-tax margins 36% on this guy. No, this is HCC. Let's do CCR. Because this is an interesting formation. 95 composite rating. Wow. 75% EPS change quarter last, or 75% change in EPS last quarter. 51% last 3 quarters average EPS growth range. 442% EPS growth current quarter. 13% pre-tax margin. ROE's 19%. Accumulation is D plus. Up-down volume is 1.5. That's interesting dichotomy there. Don't see that every day. No news to speak of, but 94 relative strength rating. So some pretty good metrics on some of the black gold, ladies and gentlemen. Pretty good metrics. What's up, Daniel? I do not have my own courses. It's been a struggle of mine, to be honest with you. I've got a lot of content, but it's never been good enough for me to really put out. Yeah, Nodes is pretty good. Nodes is a good course. I would recommend Node. He and I have a very similar strategy. Or I don't know about strategy. We have a very we work well together. Let's just put it that way. How high is Tesla going? I don't know exactly how high. I think in the upcoming years it'll be in the thousands of dollars, in my personal opinion. How many years? I don't know, but this will seem fairly cheap in comparison. Once it gets production ramped up, it's gonna be a game changer. I mean, they're gonna have such high margin for an auto company. it's going to be ridiculous. Then they're going to end up with, you know, the Roadster and once they roll out with that semi-truck, man, it's done. I mean, they're going to have all the money they need. Not that they don't already. But yeah, good quarter. He said he was going to be profitable. He's profitable. No need to. I've explained my position on Tesla a number of times. If you guys really want to hear it again, let me know. But looks like we're popping up here 1.5% now. On the 15-minute chart, which we're still have a little bit of time left. We may find some resistance up here at about this 170, 169, 170 level. A little high right there, and a high overnight right there. That could provide some resistance. All right, let's go look at some other stocks. Man, those coal ones are gangbusters. HCC's been at the top of our list here a number of times. So, again, not sure if they're going to run like a lot of growth stocks, but let's look at HCC's numbers. I'll just pull them up here. Keep an eye on some percentages. Ah, crap, I can't see it. Oh well. HCC, 27 EPS change last quarter, 63% average EPS growth rate, 80% ROE, 36% pre-tax margin, which is probably why they look so good. They have very low cost, looks like. B minus accumulation distribution, 1.3 up-down ratio. So this is a simple A to D scale right there, or A to E scale. And then this is just a ratio of up days versus down days in terms of volume numbers. So 1.3 indicates there's 30% more buying over the past 13 weeks than there is selling. 4% change in funds owning stock, 5 quarters of increasing fund ownership. This 94 here is the relative strength line to the S&P 500, showing some leadership. B minus group relative strength rating, which is good. So Warrior Coal, yeah, looking pretty good right there. 1.6% on the NASDAQ. Move this out to the daily. So last time we had a huge down day was this day. Almost, I won't say an identical day. But looks like a little bit worse. You can see we had a little bit lower there, but this one bounced back over the next 1, 2, 3, 4, 5 days before finally rolling over again. Do we do something like that? Have we hit the bottom? We don't know. We don't know, but you know, it's kind of play what the market gives you there. Up about 2% on the Qs, 1.67 on the NQs. And like I said, looking intraday, looks like we could find a pause at the, was it 170 level? Potentially. But that's going pretty short term. Right about there. All right, let's go back to our leading stocks. We got Twitter, head and shoulders with the neckline. Didn't quite play out fully. And it looks like it's rocking here today. We did note the other day that Twitter was holding up relatively well to the market with earnings coming out, had the big reaction. So, and holding up really well too, still holding that 18% and going higher. Yeah, not looking bad actually. Take-Two Interactive, we know about Tesla. Very intrigued by Proto Labs. Daniel thinks the SPY will slowly roll over and test the 260 level. Yeah, it definitely could. 260 is not out of the figment of imagination. This would be a correction. This would be a bear market. Those are our two, not targets, but those are the two things that people would look for as a correction and as a bear market between both, somewhere between both of these lines. Yeah, it definitely is fully possible that we kind of roll over into that level. If we get down there, I'll probably be, hopefully we'll have another high volume signal. I'll probably be buying a little bit more of that TQQQ strategy. If we don't get one of those high volume signals, I'll have to find an alternative. Anyway, let's keep going with this here. We got weekly here, daily here. We're going to breeze through some of the leading stocks on my chart here. Got an MJ stock, PKG, which had a big downtrend. Look at that, all the way back down to the lows here from 2015. To be honest with you, I don't bottom buy, but if you're a bottom buyer, buy that bottom, because that's pretty rare that a stock such as PKG comes down like that. Now, I probably shouldn't say that because we're we're having a pretty big sell-off here, in the middle of a big sell-off, but that is yeah, when's the last time you could say that about PKG? Anyway, you guys don't know a lot about PKG. All good. Spirit Airlines, proving strong in a pretty weird tape. The airline stocks, look at that, very nice flat action over the past several years. So trading in some kind of a range. You can see it here on the daily. Yesterday was a pretty bad day. Today coming back pretty strong, selling off again, ever so slightly, but still up 6% towards the top of our list there. Therm, Cron. You know, one thing we should do is go through the scanner. So we'll breeze through some of these real quick, see if there's anything interesting. Here's the daily. Here's the weekly. If you guys see something you like or want to take a better look at, let me know. We got Noah. Looking okay. We got Cron, another MJ stock. FFIV coming to the 200-day. Don't need 200 weeks to the right. All right, Twilio pulled back quite significantly, well under the 50-day moving average. Definitely need some time. Again, Warrior Coal up 5% today. Yesterday it was, I guess it was down 5% yesterday, 6% yesterday. That'd have been a good day to get into to that Warrior Coal bounce, finding support on that 50-day. I mean, this thing is very, very supportive here. Like I said, I don't know if I would buy it right now. If you did, you would have to give it that stop loss, I think, probably under the 200-day. It has found support at that 200-day moving average here recently, but I think a buy over 30 would be much more healthy if volume was accelerating on that coal name. No one's talking about trading coal, guys. Could be a kind of a hidden gem. I say could be because I've never really seen coal run a tremendous amount. May have to go do some homework on that. LAD, Lithium Motors, yesterday was rallying against the market. It did have some selling in it, obviously, but you can see today it looks like it's following through a little bit. Although that's a huge volume candle yesterday. Could end up being one of those one and dones. Maybe it goes. So here's a sell-off that was a one and done. It eventually reversed and then rolled back over towards the initial direction there. So we'll see what happens here if it does the same thing, if it curls back up. We'll see there. But LAD, nothing to do here quite yet. There's a gap here to fill as well. See what it does over here at 94. And there's Twilio again. Toll. And Toll very weak here. You can see on the weekly here, it's come down to what was at one point in time a support level. And it's come right back down to that after a pretty big bull run last year. A huge bull run last year. Send, didn't they get bought? I'm still confused on if Send is being acquired or not. TNA is 3 times the Russell 2000, so you see what that's done. Hertz Rent-A-Car, still within this channel. Never really got going. Match was working better than most the other day. And so far here, still respecting that trend line right there. Above the 200-day, which is more than what you can say for a lot of stocks these days, but below the 50-day. So that needs to wait until it cuts back above the 50-day on volume before really get interested in match. Grifols. Whoop, no, I clicked on TNA. That match. You're killing me. Grifols. Rolling over here against the weekly. Not super interested on that one. CGC, another MJ stock. Coming out of this triangle. Not looking so great, but having a little bit of a bounce today. A lot of those look like they just need time. CDNA, well above the 200-day, chopping around the 50-day, not necessarily violating it, not necessarily cutting through it extremely, but you can see right there a little bit of support. There's a little bit of a bull flag right there. So maybe a break over that for CDNA. I have to remind myself what they even do, to be honest with you. All right, 90 relative strength rating. Oh, wow, 76% EPS change last quarter. Oh, yeah, what do they do? Develops diagnostic surveillance products used to monitor organ transplant recipients for acute cellular rejection. Huge market. Sales change 48%. 3-year sales growth rate 29%. 1.7 up-down volume, which is pretty heavy. Accumulation distribution is a C, which is passable. 27% in funds owning stock. Sorry, I do this off screen. I probably should bring it up here. 99 relative strength rating. That's because it's holding up so well against the rest of the market right now. This is another one probably to pay close attention to. 48% sales change. I'm not sure what's going on there with the negative 35% average or annual pre-tax margin. Not sure what's going on there when they have positive EPS. Nope, they're still negative. They're still a negative 4 cents. So they still don't have a lot. They're still not profitable. They're still not profitable. Maybe moving that direction. You see volume here on the weekly picking up in 2017, moving through 2018, still accelerating on the average volume is just accelerating here. Could be a good place to pick it up. Not right now. Okay, coming to that 170 level right there. We'll see if we get stopped or not. Up about 3%. I'm on the weekly. I should be on the daily here. No wonder I feel a little lost in terms of the chart. There we go. So, that's the SPY. We'll look at the NASDAQ. All right, so there's the NASDAQ. Volume looking pretty good here so far. 30 minutes into the trading session, and our average volume is 494, and we're at 282. Yesterday we printed 800,000. So we're about a quarter way through our volume day, if that's a thing, and then yeah, looks pretty good right there. Another high volume down day again could potentially yesterday it'd have been ballsy, but buying it that low may turn out to be a good thing. We're seeing some good names having some support here, not necessarily major leaders, but definitely some good names. I guess the question is, and this is kind of a broader market picture here. Oh, what's Amazon doing? I got Amazon at the top of my list. Up 4%. Microsoft up 6%. Wow. So these are your top market cap names. Oops. So Amazon up 4%. They got earnings after today. Microsoft coming down to the 200-day. Didn't breach it, though. Look at that. Wow. This could be a pretty immediate reversal here, guys. If that like keeps going like that. Microsoft, that is some strength in Microsoft. I mean, look at that again. After what yesterday was just a major route to the downside. Same with both of these candles coinciding with the NASDAQ sell-off. Another big sell-off. And then we need to see how this day closes, man. If Microsoft closes like well up here, I don't know. I mean, look at it. Whoops, look at Microsoft on the weekly. It's been one of the more steady stocks on the web. This could just be another little ripple in the chart when it's all said and done. I don't know. That's why I say when you got to come up with these strategies, guys, because the emotions in the moment are so powerful, right? Like they're just so powerful. But when the market reverses, like this is Microsoft. This isn't some willy-nilly stock, right? Market cap of $838 billion, almost in that $1 trillion club. They're right up there with just underneath Amazon, which I didn't quite realize. What's Apple doing? It didn't make my list there. Only up 2%, but Apple never really sold off. Look at that, holding tight on the 50-day. No major selling in Apple. I mean, look at yesterday. There's that big down day. Never undercut these prior lows. Just chilling. It does look like a bear flag right there on Apple. But yeah, no major sell-off at all. I mean, you got the 200 days way the hell down here at 190. Way down there. So, strength in Apple. Let's look at Amazon. So, I'm sure everyone knows by now, Apple and Amazon pretty much rule the roost when it comes to the NASDAQ market, because due to their market cap. Amazon not looking as strong. Of course, we have earnings. If we have good Amazon earnings, that may just reverse this market, period. I mean, it could do it instantly, and it could do it very quick. And they're like, oh, just barely undercut. Why didn't I buy it? Higher volume. Randy talked about high volume, low bars. I mean, maybe. I'm not advocating for that particular strategy, but it definitely is still in the cards, is fully plausible. I mean, that Microsoft chart, that's some freaking strength right there. In a stock that was already pretty strong. I mean, historically here, not even getting close to that 200-day moving average. All right, let's take a look at some of these other high market cap ones. We have Google next. The 762 billion market cap is undercutting its 50-day. Another Google chart. Comcast cable. That's funny. So my scan scans for anything over 3% up. And of the mega caps, Amazon, Microsoft, and Google are the three that I got. I guess what does that leave out? I guess is another question. Let's see if I can get a second scan in here. Can I detach my detached scan? Yes, I can. All right, so let's just scan for 200 billion market cap companies and above. Very short list. So let's blow through them. These are the stocks over 200 billion regardless of anything else. Apple holding very tight. Amazon at the 200-day moving average. Microsoft having a pretty strong bounce so far today. Looks like we're starting to see that. I mentioned 170. Looks like 170. I'm really curious if we're going to have a day like that day. Like I don't know if it would. Because look at this volume so far. Look at that. You've got, remember we talked about a little bit ago this day being very close to this day. What if this day is just like this day? Yeah, it's possible. But 170 seemed like a natural spot for it to roll over. Looks like it is seeing some pausing there at 170. Let's continue with that. We got Microsoft. Looks like a pretty strong day so far. Man, if it closes up here, and this is the bad part about doing this with the first half hour of the day. This is the time where they kind of fudge with the market. Is that first half hour. All right, Google. We talked about Google underneath the 200-day moving average. Not really undercutting any major trend lines. We would be in trouble, I will say this, if we start seeing some of these. Let's do this. Let's draw some longer-term trend lines in here. I'm really just kind of talking right now. That's not very good work. Let's do some good work. Let's do some charting. Let's draw trend lines. Can never go wrong drawing trend lines. Ever. Actually, Amazon's a little quirky. A lot of trend lines in Amazon. Okay, so this could be considered a parabolic move. I mean, it's not really. Well, let's look at the numbers. Parabolic move is 50 to 80% within 3 weeks. Okay, definitely didn't do that, so never mind. Not a parabolic move. But that extreme trend line is broken. And our next trend line we have is all the way down here, which if you notice puts us right in line with this 20% bear market situation right there. Puts us right in line with that. Also, there's a measured move that I took based off of this being a potential H pattern on the daily, and that's what this line is indicative of. And if we last in this bear, or I'm gonna say bear market because I'm used to talking about Bitcoin. If we last in this sell-off to this 1400 level all the way out here until April, which could happen, then we're gonna bounce off of that trend line right there. Okay, so let's go to. All right, we drew that longer term trend line on GOOGL, which is right there, and there's another one right there that we're kind of messing with. Okay, I'm just going to stay on this big weekly chart. Let's just draw these trend lines. Sounds good. Sound good, guys? Sounds good. So there's that trend line, the more immediate trend line on Google. Not nearly is vertical as Amazon. Yeah, if Amazon gets down towards that other trend line, Eli, I mean, I don't know why you wouldn't sell your house and buy Amazon at $1,400. There's no, and look at the volume on Amazon too. Look at this high volume spikes, and now comparatively, once everyone realizes that Amazon owns retail and owns the world, essentially, no major volume at this high. I mean, this is not major volume. Yeah, you can sell my house, absolutely. Eli, of course you can, my friend. Of course you can. Babe, Eli's going to sell our house and use it to buy Amazon at $1,400. Is that cool? All right, cool. She said it's cool. All right, let's go back to some longer-term trend lines. Berkshire Hathaway, ladies and gentlemen. Berkshire Hathaway. I'm going to go with Class A. Look at, no one is selling Berkshire Hathaway. What is this about? This is not normal. What happened here? I don't know. So there's your longer term trend line on Berkshire Hathaway. Last time I broke a trend line here, didn't really do a whole heck of a lot. Dirty Mike, new to trading and think I'm addicted. Okay. Dirty Mike, CA. Are you addicted to crypto trading or stock trading? Or both? Kevin thinks Amazon at 14 is 3 times what it's truly worth. Really? That's a pretty aggressive statement right there. Stock market. Okay. So I've got a channel for cryptocurrencies called Real-Crypto, and I've got a Slack chat room. I've got a Slack chat room. If you want to sign up, it's free. You don't have to pay anything for it. They do talk about cryptos a lot. I don't want you to get addicted to cryptos, but maybe that's the wrong thing. Maybe you shouldn't sign up for that chat room. Some of the guys in there trade minute charts. Yeah, I need to get my. I'm trying to think of a good resource for you to go to that will stop you from overtrading. Because this is the thing, Dirty Mike CA. There's different ways to trade the markets. Oh crap! It's 7:15 already. Shoot, I gotta run. Don't trade today, Dirty Mike. Don't. I'm just going to say that right now. Anytime someone says they're new to trading and they say something like, I think I'm addicted, or, or I see them post all the time about all these different things, and I hear about, I was trying to get them to stop trading. And I'll tell you why. But I'll have to tell you tomorrow because I've got to run. What do I think about this one? Well, I don't know anything about it. It's a penny stock, 44 cents. It is on the NASDAQ, though. I don't know how. Yeah, just avoid it. Just avoid it there. All right, guys, I have to run. We'll finish this trendline exercise. Maybe I'll do it today after I drop my kids off at school. All right, guys, I'll see you tomorrow. Have a good one.